Hello, hello, hello. Happy GDP Thursday. How's everyone doing? Good morning, Patrick. Good morning, Sterling. Thank you for putting in all the news and everything that's going on, Sterling. Good morning, Royal Palms. We'll wait for some other people to filter in. Again, holiday season, but remember today and tomorrow are the important numbers. Good morning, Tony. So, GDP numbers coming out. This is back from the third quarter. This is the final print, so this is the final revision. Forecast 5.2 coming in at 4.9, so slight drop there. GDP price index coming in slightly better. Core PCE prices coming in quarter over quarter at 2% versus 2.3, so that coming in better. Market really liked this number. It exploded higher off that. The Philadelphia Fed stuff also coming out in contraction, pretty deep contraction again, and Philly Fed employment, but prices paid popping on Philly Fed. That's sort of interesting. I do not think inflation is tamed yet, but the market seems to be thinking there's still going to be some massive rate cuts. We have the Consumer Board leading index coming out at 9 a.m. Central, so 30 minutes after the cash open. What else? We had initial and continuing jobless claims. Initial jobless claims coming in at 205. Slightly better than forecast, and continuing jobless claims coming in 1865. Slightly better than forecast also. So not much to talk about there. The markets, though, rocking higher after yesterday's afternoon sell-off. Massive sell programs. You should have seen that in the tick if you're following the tick. But it's buy everything this morning. It's buy it all back. Sell it yesterday, buy it back today. So everything's green still. Let's just see. Yeah. Everything's green today. Buy it all. Technology, comm services, consumer cyclical leading the charge higher. Let me just refresh the Fed Watch tool one more time. So at this point, wow. 1, 2, 3, 4, 5, 6, 7 cuts priced in for next year. 7 cuts. Down to 3.5 to 3.75 by next December. Wow. That's the market's going crazy. Remember, it was maybe 2 to 3 from the Fed, and this has 7 priced in. Okay, still in greed with yesterday's little sell-off. Still in greed mode, just out of extreme greed. We had Micron was a beat and a gap up. We talked about that 75% harmonic target. That is still the first target. Nike after the close. I did not look at CarMax this morning. I was too busy focusing on the GDP stuff. So, sorry about not looking at CarMax. And then tomorrow, nothing. So, really, it's just Nike not going to be market moving. So you see the sell-off yesterday. This is the S&P straight to the 8 EMA, straight to the first half of the rotation zone. Now I have the retracements on. The retracements, that's what I'm focused on. So earlier today, here was the release. You can see it here in the 15-minute. This was the GDP print, the big rocket ship up. Support 47.77, 47.76 is the first area of support. And the key area for any breakdown trades is 47.70. I'm still watching on a continued rally, 47.98 on a closing basis, at least a 1-hour closing basis. Yeah, we'll go take a look at MU again. Good morning, Anissa. Good morning, Richard. Good morning, Legion Reaver. Good morning, Charles. Let's see. Good morning, Tony. I'm trying to get through everybody. You got to say good morning to everybody. All right, so 47.98 is what I'll be watching on a closing basis. And then above that, 48.09 would take us into double top territory on a, there we go, on at least a 4-hour basis. So I'll be keeping an eye on that even next week if we don't follow through to the upside today. But can't get anything really bearish until we start breaking below 47.70 unless there's an intraday bearish pattern. The NASDAQ coming back almost the 8, but completing the targets. We had the little wedge break down, kiss the wedge goodbye, and then here was the target line. Kaboom. So that's done. The wedge played out. Gave the market a little wedgie yesterday. And then the bounce back of buying everything today. On a 1 hour closing basis, I'm keeping an eye on 16,955.50. Above that, then 16,995 roughly, then 17,034. But 16,994 will put us in 4 hour double top territory. So that's what I'll be keeping an eye on, because this is, I consider, one side of the top, the left-hand side. This is it's going to be an ugly one, but it'll give us. It's just going to correspond with yesterday's big sell-off bar. That's going to be the trigger if these do get to double top, and that's going to be an important trigger anyways, because if we break down below that, we could start a bigger correction. So keep an eye on that. The key line in the sand. Sorry about that. I didn't mean to switch that. The key line in the sand can't get anything really overly bearish besides an intraday shorter term bearish pattern, which we don't have yet. 16,862. 16,860s roughly. Now, if we rotate back up here and make a little double, then I'd watch for that going after the open. Other than that, there's nothing just yet. The Dow breaking down from the channel straight to the 8 EMA. It's one of the reasons that's on the chart, that key 8. Closing basis to watch is 37,779 intraday. Then the next level is 37,856. The breakdown point at this point for me is about 37,580. So that's it in the Dow. But remember, a lot of times, and we have the Dow chart up here now, we'll get that first reaction, primary reaction, hits the rotation zone, bounces up. This is the secondary reaction that sets up. So whether these turn into doubles or not, these key lows from yesterday are very important, because they're also going into these clear path moves, and it's already weakened the rotation zone once. And remember how overbought we are. So that's what I'm paying attention to, whether or not they turn into doubles. The Russell, so far, Russell yesterday holding the key support area at 2,000. So that's where we sit with the Russell. That is the key line in the sand, 2,000. On any bullish, we've already hit the 50% retracement this morning. 2041 is key on the closing basis. The minor breakdown area for the Russell is looking at 2020. Who else? Good morning, Jake. The VIX. Little pop yesterday, closing above that 1335 area. That's what I'm watching this morning. We start dropping below 1335. I'll watch more for a continued bounce. We hold above there. I'll watch more for consolidation and possible chop back and forth unless we break those key levels I talked about. The DAX. The DAX is just not much going on here just yet. We still unable to fill the roll gap, 16,750. So we start breaking below about 16,8. That's the first target, then about 16,675 area. But right now, the DAX is just a sideways correction, holding the rotation zone. If you really start closing below the 16,800, we could start getting the bigger pullback even before the double triggers. The notes, it looks like, what do we have here now? Well, you can't use that anymore. Notes right now, next target 113.07 and 113.19. These markets are really discounting anything with rates. I think this is getting a little nuts. But those are the next two targets. Moving up, can't really get bearish unless it gets below 112.07. The yield, 10-year micro yield, what's it trading? 3.848, hitting the next little harmonic, the 3.833 harmonic today. If it continues lower, 3.782. No major bottoming formation in there yet. The 10-2s still caught in the range. Nothing to report about there. Dollar index. Dollar index. It is sloppy, but it does count for a potential double. That's the only sign of a reversal. The next key area, if we break below the lows from Thursday the 14th, is still this 101.06 area to reconnect with the 75% harmonic. So that's the next target unless the double triggers. And the double may get invalidated. Crude, little pullback here. No close above the 62.5. So now I'm watching the pullback reactions and seeing how we're good. If we hold above very key support about 71.40, 71.50. So going to watch. We had a multi-day run up, a slight little pullback. Now that's the key level I am watching for any pullback. Gold, still nothing. We'll get to some other stuff in the bit. Yen rotating back down, so holding the rotation zone. So nothing yet here. You can use the minor retracement harmonics of this run up if you're looking for targets. Other than that, if we do break below Thursday the 14th low, the next target is 139.56. Euro, it still counts. This did not pull back far enough, so keep an eye on that. Other than that, I'm really watching if we break above 110, we could make that quick trip again to 110.68, 69. The pound, nothing going on there. The spiders, we had the retracement. The retracement now. Yesterday to the rotation zone. Okay, and now the gap up. The key thing, we're going to flip this around and use the single bar harmonics. So right now on any roll, here's exactly the levels I look at. Single bar harmonics, when we get an outside key reversal bar like this, we're looking to open around 471.60. So 471.90 is the 50%. The 62.5 is 472.87. We'll be watching for that if it rallies on a 1-hour closing basis. Then I'd be focused on the 75%, which is coming in roughly with yesterday's open. 473.88 to about 473.96. Then 474.89. If it rolls over 470.84, 469.84, 468.83, and then the gap fill, 468.26. This is a great thing to remember. Again, another outside key reversal with the wedge yesterday. Let me just take off these lines. Again, my thing, when you get an outside key reversal day, that's this wide, just single bar harmonics. That's what you should focus on from my perspective. 407.63 is the key 1-hour closing level. Above there, 408.60, 409.52 to the downside. I'd watch those key support levels in the futures I already listed earlier, because if they start breaking, you got 406.68, 405.74, 404.79, 403.85, and then the gap fill to 403.08. What else? You have Tesla, which you had the double from yesterday, now just bouncing back, hitting the first target area. Why not all rush in and buy Tesla again? If it rolls over again, it would be the gap fill. 247.14, 245.83, 243.98. If it doesn't roll over and it rallies, you can use single bar harmonics on this, but the key target price would be yesterday's open, 256.41. Hey, Christoph. Coco thinks soft landing next year. What do you're tuning in again, Coco, or you're just coming in to say soft landing? This is like 3 days in a row, Coco. What else do we have? You had coin in here, Sterling. Coin, yep, approaching the second target on the big monthly double. There's your big monthly double. Approaching this 165.51, 172.90. So there's how that's playing out. Then 191.77 if it hits that final target. So that's where that sits. What else did you have in here? WBD has triggered a daily, weekly double bottom and has pulled back to candle bodies. Yep, that's still qualifies. On the sloppy side, but still qualifies. So that's going to be very key. Right here, that's your key level support, about 1140. After finding resistance at the 200 area, so that's very key, but that could be interesting once cycles get to the bottom if it holds this level. So, thank you for putting that in. Could we go over to next targets for MU? I'm getting back through the messages. Nothing's changed since yesterday. You had the sell-off yesterday with the market sell-off, and then you had the beat with the earnings. And the target's still 85.95, then above that 92.20. That is key. And this 85.95 level I would not ignore, especially since that was the major reversal bar back in March of 22. You see here the gap up, the running up to that level, and then the dumping back down. So this 85.95 area trapped a lot of people. It's also prior support becoming resistance. So, you know, if you're holding this long, that would definitely be an area to at least raise a stop from my perspective. Anywhere 85 to 85.95, I'd be looking to raise stops. All right. What else do we have going on? So, URA, we can look at URA, uranium. Again, hitting the 87.5 the other day. We had the key resistance and then popping up. So you see the harmonics holding, and then the pop to 87.5. We had that 87.5 magnet. At this point, it's now back to a very key level. This 28 level is very key. If we start breaking below the 28 level, I'll be watching for something closer to the bottom of the weekly rotation zone. And 27 is my next, it just happens to be 27 is the next key area, and then 26.37. From the trading around a core position, do not want a weekly close below 26.37. If that does, then from my perspective, it's holding on and staying light until we get back to 24. But this is approaching the first major key area on the weekly and the daily. So I am watching to see how this holds right around at this 28 area. All right. If this holds here and we get support, I'll be looking at shorter term stuff down here. But if that holds, then I'll be looking for a potential retest of this 29.86. If that breaks, then it's 31.65. Good morning, Jacob. So that's where we sit. I got to make this a shorter session today. I'm really busy going into the open. But it's going to be interesting to see. We had some key rollovers yesterday, but it's going to be interesting to see how much it bounces today, whether it's just rush in and buy everything like in Nvidia and all the others, or it's just sitting on hands and or next rollover play. Meta's also, we haven't covered this recently. We finally, after the close back above the 62.5 back in June, finally reconnected. I did not talk about this the last couple days with the 87.5. So that just finished the 87.5 rule also. So some of these have, a lot of these techs have gotten and completed a lot of very key areas. A lot of the comm serves and techs. So keep an eye on that if they begin to roll over. Hey, Mega Chad, thanks for tuning in. We'll take more of a look at the US dollar, Japanese yen. We can probably look at that more tomorrow. With that, I got to wrap this up for now, and I shall talk to everyone later. Again, there should be about the percent B training session probably around 11 a.m. Central Time tomorrow, but I will be here in the morning, and I'll let you know if anything's going to change. So that's where we sit with that, and I'll talk to everyone later. Have a wonderful trading day. Bye for now.